What's up everybody, I am Jaspreet Singh and the next few months are going to be, well, interesting when it comes to the markets. We've been seeing record-breaking inflation which is not slowing down. We had the conflicts between Russia and Ukraine causing oil prices to skyrocket. We have the issues with this pandemic starting up again, and then we have the Federal Reserve Bank now raising interest rates to fight off inflation, and then we have crypto and regulations. There's one thing that markets and investors hate more than anything else: uncertainty. And now with the changes that the Federal Reserve Bank is making, with the changes that are happening overseas, with the changes that are happening in cryptocurrency, with the changes that are happening in the energy markets, we're seeing a lot of uncertainty which creates a lot of volatility in the markets. The 5 areas that I want to talk about today and their impacts to the markets are: 1, what's happening internationally between Russia and Ukraine and everything else over there. 2nd, this pandemic which might be potentially coming back. We're already seeing lockdowns in China. 3rd is what's going on with the Federal Reserve Bank and interest rates and how that's going to affect the economy. 4th, cryptocurrency and regulations in cryptocurrency. And then number 5, inflation, the supply chain, and the costs of everything. So let's start here with number 1. The conflict between Russia and Ukraine is having some pretty obvious consequences when it comes to oil prices, energy prices, and gas prices, but there are some unintended consequences as well. We've already been facing a massive computer chip shortage for almost 2 years now. This computer chip shortage has made it hard to get all things related to computers, from computers to video games to cars. In 2021, everybody was predicting that the chip shortage would be a lot better by 2022, and then in early 2022, that's when we found out that that was wrong. This chip shortage is significantly worse than what we expected, and then we started having the conflict between Russia and Ukraine. Well, Ukraine produces 70% of the world's neon, and neon is a crucial component in producing computer chips. So you have to expect that these international conflicts are going to affect the supply chain for computer chips and everything technological. So that hurts car companies and other hardware companies that use computer chips in their businesses. And then obviously you have the higher cost of oil. Now all of us have seen this higher cost of oil through the higher gas prices that we have to pay, but these high oil prices hurt more than just your gas. Groceries become more expensive and vacations become more expensive, and we're going to really start to experience the effects of this over the next few months as the higher costs trickle down into the other industries. And so if people have to pay more money to live their life because it costs more money for you to fill up your gas, it costs more money to eat, it costs more money to travel, well then they're ultimately going to have less money to spend on other things. And if people have less money to spend on other things like Amazon and Lululemon and Apple, that means these companies are going to make less money, which will ultimately affect these companies' bottom lines and their revenues. So this is something that you want to pay attention to, because we're going to see a lot more volatility because everything keeps getting more expensive. But I'll talk about inflation in just a little bit. The second bit of uncertainty that you want to keep your eye on is this pandemic. Now, I know this feels like a repeat of 2020, but the reality is this pandemic is starting to surge again in other parts of the country. We've already seen China impose lockdowns again, and they've shut down manufacturing plants, which is going to hurt the supply chain of things in our economy again. But this is something that you definitely want to pay attention to, because it doesn't look like this pandemic is history yet. The reason why this is important to understand from a financial perspective is anytime you see a new wave of this variant hit the United States, you see it affect the markets. Like if you just look back to the Omicron variant, you saw that the stock market was hit pretty hard as soon as the variant started surging in the United States. This affects the economy because if people are worried about the pandemic and they're worried about getting sick, they're not working. If people aren't working, they aren't producing anything. And if people aren't producing anything, then the economy is slowing. And if the economy is slowing, people have less money to spend. If people have less money to spend, that further slows the economy. Now, this is something that you want to pay attention to, because this is going to affect how the Federal Reserve Bank responds to raising interest rates, because we have the things going on overseas, we have the raging inflation, and then we have a slowing economy, partially due to this pandemic, because if people aren't working, we aren't able to grow as an economy. Now, I will say that the one plus that this pandemic has brought is it changed our working environment, because it pushed a lot of companies to allow their employees to work from home. Now, some companies don't like that. Some companies are forcing their employees to come back into the office. They're forcing them to come back into the office to be more productive, while other companies are now understanding that employees want to have this work-life balance, and they're letting their employees have the option to work from home. So it's really started to change the way that people work, which is good for people. And this dynamic has pushed a lot of people to look for their own sources of income, because they were tired of being told by the man how they need to work, where they need to work from, and the lifestyle that they need to have. So you saw this massive growth, and people started starting their own side hustles or finding their own streams of income. That's a big part of the reason why companies are still struggling to find more employees, because you have a lot of people that are now looking to create their own lifestyles by starting their own side hustles. Now, as a little tip, if you are starting your own side hustle or if you are starting your own business, make sure you have a business bank account that's made specifically for businesses to help you manage your money. If you need some help with that, you can check out our sponsor, NorthOne. NorthOne is designed for businesses and side hustlers to make managing your money super simple, because you can manage your finances off of your phone or this card right here. They make it super simple for you to manage your money and for you to manage your business finances because it's all digital. And the best part is that right now NorthOne is doing a giveaway. They're giving away $5,000 and smaller prizes of $500. All you have to do is create a business bank account. It takes just 3 minutes to do. Now, just so you're aware, the giveaway is going to end soon, so if you want to learn more, create a business bank account and see if you can win some free prizes. I'll put the link to how you can do that with our sponsor NorthOne down in the description below. Third, we have the Federal Reserve Bank finally raising interest rates. Now, the interesting thing about interest rates, kind of funny, right? It's interesting about interest rates. The interesting thing about interest rates is that interest rates are there to help manage inflation. When the Federal Reserve Bank is worried about inflation, when they're worried about high inflation, they will raise interest rates. When you raise interest rates, it makes borrowing money more expensive, which tightens the monetary supply, which reduces and cools down inflation. When the Fed is worried about a slowing economy, that's when they cut interest rates, which increases inflation because now you can borrow money cheaper, and that helps to stimulate the economy. But we're in a weird situation right now, because right now we have high inflation and we have a slowing economy. Remember what I just said, to fight a slowing economy, the Fed is typically going to cut interest rates. But when you're in a high inflationary environment, the Fed typically has to raise interest rates. The Fed can't raise interest rates and cut interest rates at the exact same time, so the Fed has to make a decision. Is it going to fight inflation or is it going to fight a slowing economy? Right now, inflation is a pretty big problem, so the Fed is slowly starting to raise interest rates. But if the Fed really wants to fight inflation and it wants to get inflation under control in 2022, which is what they say they want to do, they're going to have to raise interest rates significantly faster, because at this rate, they're not going to be able to fight this, but they're also going to hurt the economy at the same time. This is something you definitely want to pay attention to, because as the Fed continues to raise interest rates in 2022, borrowing money is going to become more expensive, which is going to hurt companies, because now you're going to have to pay more money to borrow money. It's going to be more expensive to pay off your debt, and it's also going to hurt the United States government, because the United States government has over $30 trillion worth of national debt. And now when the United States government has to pay this money back at a higher interest rate, it's going to be more expensive for the government to do that. And remember, the government isn't just sitting on a pile of cash somewhere. The government gets their money to fund their operations from tax dollars through taxpayers. So the goal with raising interest rates is to help control inflation, but the cost of raising interest rates is that it's going to be more expensive to operate your business. It's going to be more expensive for the United States government to operate the country, and it's going to be more expensive for you to go out and borrow money, which means it's going to be more expensive for people to buy a home. It's going to be more expensive to buy a car, and your credit card debt becomes more expensive. So not only do you want to pay attention to how fast the Fed is raising interest rates, but you also want to pay attention to its real effect on the economy and spending, because if we start to see a massive slowdown in the economy, you might see the Fed turn around and say, okay, we're not going to be able to raise interest rates as fast as we would like, or we can't continue raising interest rates because the economy is getting hurt, because oil prices are too high, because of what's happening overseas, or because of this pandemic. And then they turn around and slow down their policy, which then in turn would hurt the inflation problem that we're having right now, which is something you definitely want to pay attention to, which is something every investor is keeping their eye on. Fourth, you have a lot of changes happening around the world when it comes to cryptocurrency. First, in the United States, President Biden came out and in an executive order, he says that he wants the government to start thinking about a digital dollar. Now, he didn't say that he wants to create a digital dollar right now, but he said that it's urgent that we start thinking about a digital dollar and if it's right for the United States. Now, this would change cryptocurrency, but that also means that we would see a lot more regulations come into cryptocurrency. Like in the European Union, we saw more cryptocurrency regulations come in, and we saw the effects of that on Bitcoin prices. And we have the SEC here in the United United States talking about how they want to regulate cryptocurrency, how they want to regulate stablecoins, and how they want to even consider regulating DeFi, the decentralized finance space. So you are going to see more regulations in the cryptocurrency market, which could have broader implications on the stock market in general, depending on what the regulations are. One piece of advice that I have for all of you crypto investors and traders out there, if you are purchasing cryptocurrency, make sure you protect your cryptocurrency, because we've seen a lot of cryptocurrency scams happen in 2021 and 2022, and it doesn't look like these scams are going to be shutting down anytime soon. So protect yourself. That means have a cold wallet, or at least a hot wallet, to protect and store your cryptocurrency. Don't just keep it on an exchange. Keep your money safe, put it on a wallet. That way it's protected. It has another layer of protection than just keeping your money in an exchange. And if an investment seems like it's too good to be true, it probably is. Just because it's cryptocurrency doesn't mean it's going to go to the moon or go to the Mars. So be smart and research your investments before you just blindly dump your money into it. And fifth, you have to keep your eye on what's going on with inflation. It's funny, if you go back to 2021, the Federal Reserve Bank said time and time again that inflation would cool down by the end of 2021. Then came the end of 2021 and the Fed said that inflation will definitely cool down by the second half of 2022. The Fed's goal was to bring us back to around 2 or 3% inflation by the end of 2022, but right now inflation just keeps getting higher and higher and higher. Now, inflation is important for you to understand because it means that your buying power is being decreased every single day, because as we start to see more inflation, the value of a dollar goes down. But this is also important to understand from an investing perspective, because if we continue to see very high inflation, well, that means it's going to be harder for people to go out and buy things, because you have to pay more money for your groceries, you have to pay more money for your gas, you have to pay more money for your rent, and those higher expenses leave less money for you to go out and spend money on other things like Lululemon and Apple and Amazon. And so if you have less money to spend, that means companies ultimately make less money, because now these companies that are selling things that they want you to buy are not going to be able to sell as much stuff because people just don't have as much money. Sure, you can turn to your credit card. We've seen credit card debt rise over the last 12 months, but there's going to be a limit to how much money people can spend, because wages haven't been able to keep up with the higher cost of living. And now with gas prices as high as they are, and with China shutting down some manufacturing plants, is going to make the price of certain things even more expensive than they are right now, which is why you want to keep an eye on inflation, because this is going to play a factor when it comes to the markets, because we are on the verge of entering a recession induced by inflation. Remember, our economy runs on spending. The more money you spend, the more money somebody else makes. Well, if you can't afford to spend money because everything is so expensive, that means other people make less money because you're not spending as much money. Maybe you can't go out to eat as much. If you're not going out to eat as much, that means that restaurant that you would have gone to eat at isn't going to make as much money. If that restaurant isn't making as much money, then they can't continue to grow their business. Maybe they have to let some of their wait staff go. And that's what slows down the economy, which is why you want to pay attention to this and how it's going to affect the markets. Now, if you're looking for an easy way to stay on top of what's happening in the world like this, you can check out Market Briefs. It's a free financial newsletter that I created where every day my team is going out researching what's happening in the world financially, what's happening in the markets, and they break it down in a super simple to read newsletter. It takes less than 5 minutes to read it in the morning, and it'll break down everything you need to know, from the stock market to the housing market to the economy to what's happening overseas to inflation. It's super simple, it's fun to read, and it's pretty funny too. So if you want to join Market Briefs, just go to marketbriefs.com. I'll also link it for you down in the description below. If you enjoyed this video and you want to get a better understanding of what's happening overseas, watch this video right over here. And if you want to join Market Briefs, all you got to do is click that button below. Thank you for watching, and as always, keep hustling. Russia essentially gave the middle finger to the United States, and they said, screw you, we don't care. We have your oil, so we're not going to give you oil. And then they